Welcome to Fintech Confidential, bringing you the people, tech, and companies that change how you pay and get paid.
I saw the power of technology and what it could do, and I really said, how could I leverage this and build something for the community I come from?
But most can't walk into a bank and get taken seriously.
Yeah, well, we've all heard the term starving artist. It's not great to be in that position. I was that type of artist. My story from crack to rap to tech. Yo, I could take this and really empower not only myself, but my community, where I come from, people just like me. I am a glitch in the if you would. Formerly incarcerated, 8th grade formal education. Why would they open the door for me? A money transmission license. Would we be able to get that? We empower independent urban music artists and creators, access to capital. I say have courage to achieve the impossible. In fintech, you're facing things that are nearly impossible to change.
Hey, Tedd Huff here. Ever thought about how you could streamline your application and underwriting process? Well, let me introduce you to Under. Why keep using the outdated methods of PDFs when you can digitize them effortlessly? All you gotta do is upload the PDF, send it out for digital signature, and voila, you're set for the digital age. Are you curious on how to make that happen? Head over to under.io/FTC and get started for free. It's really that simple. Welcome to Fintech Confidential's Leaders One-on-One series, where we sit down with fintech leaders to learn about what drives their passion for fintech, their business, and leadership lessons through their life stories. I'm your host, Tedd Huff. What happens when a former hip-hop artist starts building bank infrastructure? No. This isn't a pitch for a Netflix reality series. It is the truth, and it is what is happening today. And mainly because there's a growing conversation that really doesn't get enough airtime. How artists, especially those from underserved communities, are locked out of real financial tools. And this isn't by chance, unfortunately, it's by design. And today's guest has lived both sides. As a professional recording artist, he saw how independent creators get boxed into really bad deals. As a fintech founder, he's now building platforms to give them something better. Victor Lombard, better known as Dfns, is a serial fintech founder and now sits as the CEO and co-founder of Notes. Yeah, it is that Notes, the one that he co-founded with legendary Rakim. But before Notes, there was Black and then there was Solvent, two fintech startups built with real banking and payments infrastructure. And they were focused on reshaping access to capital for communities often written off by the system. This isn't new to him, and he's not guessing. Because back in 2014, Dfns connected with Ben Horowitz, yes, the co-founder of A16Z. And that relationship became a mentorship. And that mentorship laid the groundwork for a founder who thinks about money systems completely differently. And he's faced all kinds of regulatory requirements, things like reserve capital hurdles, BAS collapses, the vetting bias that goes on, and he's been through it, and he keeps building. What does it actually take to launch a fintech if you're not coming from Wall Street? How do you build financial tools for creatives who've only ever been handed bad contracts? And why isn't anyone talking about the real risk bias in fintech? Well, that's what we're going to do here today. So grab your seat because this one's about building clarity, backing it with experience, and showing why Dfns' work hits different because it's built from the ground up. So let's get into it. Dfns, man, thank you so much for joining me today.
Tedd, my brother, thank you for having me, man. And it's an honor and a privilege to be joining you.
Notes is your latest passion project in this space. Can you briefly explain to us what that moment was like when you're like, hey, I want to get into this fintech space? What was that moment like?
Yeah. Building up to Notes. Prior to that, as you mentioned, I connected with Ben Horowitz, and he became like a mentor to me, and that's what really exposed me to technology. That's how I entered the technology space. And once I got there, I saw the power of technology and what it could do, and I really said, how could I leverage this and build something for the community I come from? Right? People are often overlooked. underrepresented, underserved, and totally locked out of the financial systems. So in thinking that way, I just really started thinking about, I've always had this fascination with how money moves, if you would, right? I wouldn't call it that back then, but now that I know now, being a fintech, how money moves, right? And just being enthralled by financial services and how people became wealthy, became rich. I've always had this fascination. So when I got into tech and I learned about financial technology, I'm like, oh, okay, you can use tech in this way, in the financial services space and really build something powerful. And that's what really got my wheels turning from building Black to building Solvent, and now incorporating that experience over the last 10 years into what we're building with Notes.
Yeah, and it's interesting, the creators have really been fueling the global economy, but most can't walk into a bank and get taken seriously. Like if they need to get a loan to buy some equipment, or they need to set up a payment to get moved here, there, accept a large amount of money, there's just this huge disconnect, and it's super frustrating. I've felt it, and I've been in this space forever. You've been on both sides of it. So I want to start there and really get what your perspective is on where creators today stand financially.
Yeah, well, we've all heard the term starving artist, right? And it's not great to be in that position. I was that type of artist. Albeit, I made money in different ways in the streets, but had I not been able to make money that way, I would have been considered a starving artist. And a lot of times when they try to go get loans, things of that nature, it's hard for them because they have such a high risk profile, right? They're not readily employed, perhaps. They have different streams of income going on, whether that's they're doing shows, they're selling music. So when you think about the banking system and the infrastructure of the banking system and how risk adverse they are, looking at that high risk, profile of an individual trying to loan money or get an extension of credit, it's something that they shy away from. And being an artist myself, like I said, had I not had other means of making money, as you know, I was in the streets and I made money that way. But had I not done that, I would have been in the same situation, right? And that's why Notes is now building what we're building to really circumvent that or actually solve that.
Well, it's interesting. You brought up something that a lot of people don't think about. We've talked about it on another one of our podcast series when we're talking about lending, because we're always like, how do you determine whether somebody is worth the risk or not, right? And the funny part is you hit on it, is most of the time they're like, okay, how long have you been in your job? What is your weekly, biweekly, monthly paycheck? Okay, let me look at your credit report to see how much outstanding debt you have. And when you start to get outside of the traditional vocations that have that consistent, very, very like clockwork hitting the exact amount, it makes it really hard for them to really fit somebody into their model.
Right.
And instead of trying to figure it out, a lot of times they're like, oh, forget it. We'll just say no, because it's more work for me to figure out how to make it happen than it is just to say no.
Right.
And what I would lose out of it doesn't make sense.
Yeah, and I think these institutions need to look at people for people, right? Have more empathy and more understanding and really more insight into who an individual is. Because you're more than just your credit score, right? You're more than just your FICO score. And we want to really create this platform, especially on the fintech side, or specifically on the fintech side, where it takes into account other factors beyond just your FICO on that 3-digit score, because there's so much more than that. And it looks at the entire wholeness of your financial DNA, right? Not just a leg or an arm, but the entire profile, and looks at ways that you wouldn't be risk adverse, because I understand these institutions have to be risk adverse, but I think that they need to take the blinders off and dig deeper into who an individual is beyond just a credit score.
You spent time in the studios, like you mentioned, you spent time in the streets. Now you've spent time in startups, And that kind of a shift just is really uncommon. When it does happen, it generally comes with a good reason. So walk us through like how, and I know you kind of hit on it, but I want you to go a little bit deeper. Like, how did you go from being the artist and on the streets to becoming a 3-time fintech founder?
Yeah, I'd love to give you that story. I used to, when I first entered the fintech space or technology, after meeting Ben Horowitz and connecting with Ben Horowitz on Twitter, it was a whirlwind, right? You can imagine just coming from somebody who, again, from the streets, and I'll touch on that real quick. I used to frame my story from crack to rap to tech. So if you look at the crack piece, I'm somebody who had a challenging upbringing. I lived in poverty, came out of poverty. Mother was addicted to drugs, which led to me being involved in the streets at an early age. End up going to federal prison for a lengthy sentence. And then while in prison, I decided to become a hip hop rap recording artist, right? Professionally. And then I started looking into the business side of it. And how do I start my own record label? So I learned all this while incarcerated. And then after meeting Ben's love for hip hop and my love for hip hop just connected us, right? And then from there, again, I saw the power of what tech could do, right? I saw what Ben had accomplished through technology. And I was like, yo, I could take this and really empower not only myself, but my community, where I come from, people just like me. And like you said, I am an anomaly, right? I am a glitch in the matrix, if you would. It's not common. It's very uncommon that someone from my background, 8th grade formal education, a decade of incarceration, and a no tech background, but still being able to break into one of the highest levels of Silicon Valley venture capital and set my life on this trajectory for certain success. It speaks heavily to my DNA and who I am and who I've always been. But as you said, going through that learning curve and building, and that's all I did, Ted. I just really became a student, and I really took every opportunity that I could to build my network. I quickly became known when I entered tech in the Silicon Valley spaces. I quickly became known as a super connector and hyper networked because all I knew was how to connect with people, how to be authentic, how to be transparent, how to be forthcoming, share my story, wide and far, right? And that's what I did. And I built this community of people around me that just supported me. And I was able to get where I've gotten, being as you said, a serial founder, 3 times fintech founder. And it's been an amazing journey. I've been featured in all these magazines that I used to read in prison. So to even think, so sometimes it's surreal, right, Ted? It's surreal to me because I'm like, I used to read these magazines and read about these companies in these magazines, and then to be featured in them and to have my story be told at that level it's been an amazing opportunity.
You're building a fintech product. You want to offer digital assets, but wallets, that's the hard part. Security, compliance, key orchestration, blockchain integration. That's why fintechs, payment platforms, and custodians choose Dfns. They provide wallets as a service that's API first, multi-chain by design, and secured with MPC. No single point of failure. So you can launch across over 50 blockchains, automate policy controls, and stay audit ready without managing private keys. Stripe's Bridge powers crypto payments through Dfns. MoonPay scales wallets securely with Dfns. Sphere grew without compromising on control or compliance. Even major FIs like Fidelity, ABN AMRO, as well as custodians like Zodia and Tungsten trust Dfns to power their on-chain infrastructure. Developer ready, compliance approved, production grade from day one. If you're building in payments, exchanges, OTC desks, market makers, or DeFi, Dfns wallets work the way you need them to. Request your demo at fintechconfidential.com/DFNS. Dfns, secure wallets built right. So one of the things that you mentioned was being a student, right? And learning as much as you can. What what would you say is the key lesson you learned while building your fintechs, being formerly incarcerated? Like what was the thing that you learned the most from those two? Like they almost feel polar opposite, but like what did you learn by trying to like merge those two together as you were building out these programs?
Well, I first learned that when I was in the streets doing what I was doing, I was an entrepreneur. That was one of the first things I learned, right? And I learned that I had transferable skills, right? I had these skills that were transferable into this legitimate space and this entrepreneurship and startup building ecosystem. So when I started leaning on those things, I just started thinking deeper about where do I fit in? How do I fit in? Beyond just the money side of it, right? Because I saw that you could become very, very wealthy in technology. But I said, how do I give back? And beyond my passion, what's my contribution? Right? Ben always says that don't follow your passion, follow your contribution. And the next thing I learned when I actually started building Tedd was that you don't get there alone. You don't build alone. It just doesn't happen. You need a team, and you need a team that really believes in your vision with you, right? They're absolutely committed. That was a really, really strong lesson I learned, was that you need that solid team that believes in what you're doing. Because like they say, if you want to go fast, go alone. If you want to go far, go together. That's actually an African proverb that's used in the startup ecosystem space a lot. But just looking at it like that. And then the other thing I learned from Ben, actually, people, product, profits, in that order. And that's why I lean on the team so heavily and building the right people around me.
We don't think about it a lot unless it's happening to us. And there are so many different blind spots that still persist in fintech. Can you share with us like maybe 2 or 3 that you ran into that you're solving for through your fintech startups?
Yeah. The first is access to capital, right? I solved that. I actually faced that problem myself. And now I'm trying to turn around and solve it for other people. The access to capital, people being, the unconscious bias as well, right? There's a lot of unconscious bias, and there's a lot of conscious bias, right? If you look at someone like me, formerly incarcerated, 8th grade formal education, as we talked about, no tech background, why would they open the door for me, right? Why would they do that? So in being able to have that door open for me and then get in, I'm now trying to create things that empower other people and open up doors for other people, right? And then I would lean on mentorship. Mentorship was key to my success, right? Knowing where to get the right information. Because a lot of times people from my community, they just don't have the awareness, Tedd. They don't have the awareness, so they don't have the access. Because they don't even know it exists, right? Then they don't get the opportunity, and they absolutely don't get the mentorship. So these are some of the things that I had to, if you would, grind through, right? Hustle through to learn, and then say, how do I bring this back? Is what I did with my past 2 fintech startups. Really, that educational piece, and we're now doing it with notes as well, just in a different way with the music angle.
Maybe I'm trying to bundle too much stuff in and maybe give you a little bit of an expansion outside of music, right? Because I look at music as being one of the many aspects around the creator economy that just hasn't slowed down. I mean, like, man, the one that comes to mind for me that I think that has leveraged social media and all of that the most is Teddy Swims. Like, I think about him, and like he went from being broke to signing $1 million deal, and now you're lucky to get a concert ticket for him for under $500, right? Even in the nosebleed sections. But where I was going with that is, money's coming in from everywhere. The challenge isn't really earning it, it's managing it. And what's driving the perceived sudden need for real financial tools built for creators is really interesting. And I'd love to get your perspective on why it's perceived as being all of a sudden.
Meaning, you meaning the money side of it?
Yeah. Well, why is it that it feels, or it seems, or the discussion is, hey, we've got to figure out something now for these musicians,
Right.
for these creators? What's the trigger that's making that happen? I mean, other than the fact that it's a multi-billion dollar industry,
that's a
right?
good question. I'm glad you reframed that a little for me. So there's two sides of that, right? The first side is that the traditional system, how it works, how it's built, how it was intended to work. It works just like it was built to work, right? To take advantage, exploit people's talent, right? These artists' talent. And it's happened to artists in the urban music community more than it's happened anywhere, but it happens all across the board, right? When you think about these legacy record labels that craft these contracts that lock individuals in, you basically get their firstborn, right? And you're locked into these lengthy contracts, and you don't make the lion's share of the money, right? So you're left impoverished. I'll give you a good example, TLC. TLC was a huge group, tens of millions of records sold worldwide. Yet they have to get in front of an audience and share the fact that they're broke, right? So there's many reasons why that happens, but the foundation of that is the type of record deal that they sign, right? And now when you think about the other side of that, beyond the record labels, you look at how these artists basically lack the education and the knowledge to basically navigate the music industry. They just don't know. And now when we look at the longstanding problem of the record labels, it's something that's already existed for a long time. So now we look at the other side of it, technology. And that's where I saw my aha moment. I said, okay, I've been using technology in the financial services. How could I couple that with my experience from the music industry and bring that together and combine the two, and now create something like Notes that does the same exact thing to empower these artists? Because not only is it long overdue, technology now allows you to get that leverage and level that playing field.
Well, I like how you position that, because there are a lot of platforms that say they support the artist, and they typically fall short in just the key areas you talk about, which is solving their real world financial problems of getting the deals, making sure the money flows, making sure they get their cut, making sure that when they have to pay people that it's taken care of, and all these different pieces. It's not that it's more complicated than anybody really thinks about until you get in to start thinking about it as a business, not as an art. And I think that's the biggest piece that I like, how you've approached Notes with that different purpose in mind. If you could dive in specifically and talk about maybe 2 or 3 things that challenges specifically that you're taking on head first.
I understand. I'd say the first would be lack of access to capital. That's the first thing we mentioned in our value proposition, right? We empower independent urban music artists and creators. Number one, access to capital. I'd say the other thing is that they have limited financial literacy and entrepreneurship education. You just spoke to how music is a business, right? And the word business is much bigger than the word music. So when you think about that, them having that limited financial literacy and entrepreneurship education, we're going at that. We're providing those resources and empowering them with financial literacy and entrepreneurship and music business education, so they can again navigate the music industry successfully. We don't have to rely on these exploitive contracts. And that goes back to the third one, exploitive traditional record deals, right? Again, this is the long-standing system. This is the long-standing problem, Ted. And people have tried to solve it, but they say the system always wins, right? In a sense, big bank takes little bank, if you would, or in this case, big bank takes people who are impoverished. You know what I mean? But are crazy, creative, and talented, and they exploit it. I don't like that business model. I just think it's unnecessary, right? So these are the things that notes are attacking, those three things: exploitive traditional record deals, limited financial literacy and entrepreneurship education, and of course, a lack of access to capital, amongst other things.
Those are the three core tenets. But what are the underlying things that are failing the artists today to be able to achieve that access to capital, to achieve that education, to achieve the ability to move about the cabin, for lack of a better phrase?
Yeah.
Like what are some of the things that are going on underneath of the hood that maybe a lot of people don't think about, that you realize as you've gone through building multiple fintech companies?
Man, one word, man: knowledge, right? And we talk about the awareness and the access and opportunity and the mentorship and the frameworks and the pathways. It's not easy to build a startup, as you know. And it's especially not easy to build a fintech startup. It's the most regulated space in technology. And I ran into that brick wall a few times before I could get around it, get under it, get over it, or get through it. But again, I think knowledge is the key thing that a lot of these artists lack, because they're more creatives than they are people who are knowledgeable about business, right? So I think it all ties in to that. It's what freed me in a lot of ways when I was incarcerated: knowledge, information, awareness, access. And then meeting Ben, it led me to Ben. And then when Ben opened the door for me, all it was a repeat of what I've did in prison. Look for the knowledge, get the knowledge, read, learn, study, apply, execute, all these different things. Because when you think about these artists, when I was an independent hip hop rap recording artist, I was going through the same journey. I lived it. So it's not like I'm speaking to something I don't know about. I actually did it. Because I was able to make money in the streets, I was able to fund different things. But had I not had that, it would have been so much harder for me to become successful in the music space. I'm glad I ended up taking the route of technology, because I think that it allows me to help more people. It expands my reach and my impact and what I could do for people. But again, when we talk about the lack of access to capital, I come from poverty. Capital hasn't always been readily available for me. And when I came out, living a legal life and trying to go get a loan, I didn't have the 3 C's. I didn't have the character, the credit, or the collateral, right? So there's multiple moving parts, Ted. And of course, it's a longer discussion, I believe, to really pinpoint all these different things that push the levers of why an artist cannot achieve success independently. But now with I will say this, with technology and with what we're building with Notes, something that does not exist, what we're taking all these components and bringing it into one platform, is going to allow these artists to achieve and find success.
What I want to do is take some time, and we've been talking about what you're delivering to the artists and everything, but there's a lot of stuff that goes in the background of building out the technology and the systems and all these different things. And even though you've found a need and it is super clear, progress isn't going to be automatic. You're still going to have the resistance, the red tape. As you mentioned, the systems weren't built for this type of change. What was and what has been really standing in the way of you delivering this, and maybe look at it from a broader industry issue that really needs fixing?
In the past, would have never had a chance at building a fintech company. All right. Number one, because of my background. Right, it's so regulated. They look at everything. They look at everything about your life, who you are, what you've done, what crimes have you committed. So there you have. That's the first red flag that would come up for me. I'm formally incarcerated. I'm somebody with felonies. If we needed a money transmission license, right? Would we be able to get that? Being that I'm a large owner of the company and I have a felony record. So barriers like that. And the way I circumvented some of those things was working with a BaaS platform partner, right? You talked about the BaaSes earlier. Finding one that would believe in the vision, right? And say, yeah, there's a real audience here, there's a real opportunity, and want to assist me and help me in ways that I needed it, to where if I did it on my own, I just couldn't get it done. And then, again, and then we think about startups and early stage companies trying to take on this big Goliath problem, even starting small. It's hard because you still need, again, you talked about earlier, the high reserves that are needed, the money reserves, the cash reserves that are needed on hand to even get a bank to want to open up operations with you, right, and partner with you. So I was just blessed in different ways and just really looking at these problems based on my predicaments, right? How do I circumvent this? How do I get around that? Who do I need to partner with to make it happen? So that was like a lot of it, really.
A lot of artists don't go by their legal name, their government name, as we would call it, right? They don't go by that. They create a persona that's who they embody and they go to. And you talked about what it's like to have something in your past that causes someone to raise an eyebrow. Then we talk about this name and the desire to go down that persona path and how that becomes common blockers, and then leveraging platforms like you mentioned, like a BaaS platform or a company to help you through that process. I can hear my bankers in the background going, yes, but we got to do KYC and we got to make sure the anti-money laundering is done. And we got to make sure that all these things aren't happening and that it's legit business and all that other fun stuff. As you went through and you've launched others and now this, how did you walk through that process of ensuring all the people up chain from you that the people that you were putting on were the actual people that they said they were? Yeah.
So first for me personally, because I face the same problem. I'm in fintech, right? I have a criminal record. I have felonies. The first thing I learned was building rich relationships. And when I mean rich, I'm not talking money. I'm talking the depth of those relationships, connecting with the right people, sharing my passion, sharing my vision, and surrounding myself with that team I talked about earlier, of the right people who do have the acumen that I may lack or don't have, or the credibility that I don't have. And that speaks volumes. And that's really how I did it. Surround myself with the right people that knew these things. Not only do I learn from them, but they assist me in walking through the doors I need to walk through. I mean, we've had deals with sitting down with bank presidents. One of the largest Black banks in America I sat down with. And that was a huge undertaking and just a really great milestone for me to achieve that just in my personal life. Never mind building a company, right? So you can imagine how I'm thinking, having these red flags that embody me in a sense, right? Or that are attached to me, but me being so much more than that, right? Have moved beyond that, found redemption, have found success, built relationships at high levels. That was the first thing. And then the next thing, when we talk about, the audience. Now you're talking about the audience that we're targeting. High risk audience, right? A lot of fraud.
High compliance. Yes, high exactly. Compliance. I want to call them high risk. Yes. It's high compliance.
Yeah, the KYC you talked about. You mentioned the KYC. Know your customer. All these different things. You talk about the money laundering, right? So, man, a lot of people don't want to empower people who are in these predicaments, Ted. So now it goes back to me having the empathy I had and then being able to show that and articulate that in a way where a bank president, CEO that has the power to say yes, resonates with it, understands it, and empathizes with it, and wants to give the opportunity to somebody like me to go help somebody like them.
You know, you mentioned Ben Horowitz and Silicon Valley and technology, and you know the mantra has been, and mostly still is today, is talking about moving fast, move fast, break things. Fintech, it doesn't always work out too well there, but you know, we hit friction behind the scenes a lot of times that people don't see that when we're moving this fast. And when you think across Black and Solvent and now Notes, what was the most surprising friction point that had nothing to do with technology that you came across that just surprised you?
Oh man, that's a good one. Good one. Growth. You cannot grow too fast with banks. If you grow too fast, there's like a cap. They have this cap. If you grow too fast, they stop you. No, you can't have this many customers. You can't bring them on board them that fast, that quick. They look at all of that. I was blown away by that. I'm thinking, if you have access to 1 million customers and you can actually reach them and onboard them in the banking system, the bank would support that. Then I learned that you had to have multiple banks, right? To be able to sustain that growth or support that growth. So that was something I learned new and didn't really think about until I came across that. These were the things that they were peppering me with and looking into and asking questions about. And I was like, what do you mean? We get 1 million customers, we have, you know what I mean? So that was a huge one.
Support provided by SkyFlow. What if you could build fast but not break privacy? What if you could ensure data privacy, governance, and compliance with just a few API calls? What if you could worry less about PCI requirements while actually improving privacy and security? How much more time would your team have to truly innovate? How much faster could you build and ship new features? How much more powerful could your app be? SkyFlow is a zero-trust data privacy vault delivered as an API. SkyFlow's radically simple design lets you collect, secure, and tokenize personal information like card data and payment details. And with built-in features like encrypted data analysis and sharing, anonymization, and advanced governance, your days of choosing between data security and data usability are over. Whether you're just concerned with PCI compliance or need to go further to include CCPA, GDPR, SOC 2, and beyond, SkyFlow has you covered. What if you could build fast but not break privacy? With SkyFlow, you can. Visit skyflowsecure.com today to learn how. It really does turn into more money, more problems at that point, right? Because like the more you bring in, the more, and the banks are looking at it from that perspective of, all right, well, what is this doing to, they call it concentration limits. Like, what is this doing to my concentration within the bank? Did this just massively shift at another? And then you, as a fintech, you know, and this, I have fintechs with this all the time, right? And it's like, all right, well, our goals for the next 12 months are here, and the bank says okay with that. But what happens if we exceed our goals? What are we going to do? Right. And that's where you talk about having that backup, or that, I shouldn't call it a backup bank. My bankers would be mad at me for that one. But an additional place to send customers to. Right. And then there's this weird piece, because Bank A may have required these 10 pieces of information to get everything started, whereas Bank B now requires 15. Right. And so now you're trying to figure out how all these different things work. Yes. And then on top of that, you know, I'm not going to call them out by name, but you know, there's a very well-known banking as a service provider that got caught in not being able to keep track of where everything was at and who had what and all these different things. Right. And heck, I mean, they're still going through bankruptcy now, and they still can't find a bunch of the money. I'm not even going to touch on that piece of it right now. Right. But, you know, a lot of times, you know, a great idea like Black, Solvent, Notes, there's a lot of these things that we don't think about in the back end of, like, how do we manage multiple financial institutions, but still give that amazing experience to the customer? I would love to understand from you, like, how you approach this complexity backend that you're simplifying in the experience with your team? Like what do those conversations look and sound like with them?
Yeah, it really problem solution first and foremost, right? The basic, what's the problem? Where's the bottleneck? How do we overcome it? What's in our resources? What do we have within our team to make it work, right? And a lot of times, what I found is that even though you have these hurdles you got to jump high over, most times if you come with a realistic solution to them, most people will work with you, right? I found that working with BAS, with banks, and just really just being able to articulate what we're trying to accomplish. And with my team, it's simply like, I've walked this walk already. I've been through all the no's, right? So I know where the no's are already coming. I already know we're going to get no hair. We're going to get no hair.
You can see it on their face.
Right? How do we make them a believer and get a yes? How did I do it before? How do I do it in this different way? In the new angle that I'm leveraging on financial technology now with musicians and artists and creators. So my team is, I'm blessed to have a team that understands the space as well, that know this on the tech side. And they built things that have been acquired by American Express. So, and I'm still, and no else, Ted, it's still a learning curve. I'm still learning every day.
Well, don't feel bad, man. I've been doing this for over 2.5 decades, right. And every day I'm learning something new.
Right.
There's always a curveball that gets thrown.
Something's always changing.
Like I got a call from a client of mine saying, "Hey, we just got notice from the financial institution that they're no longer going to support our industry vertical as of the end of this month." And so now we're in this point. It's like, okay, well, yeah, I know that can happen. But how do I help educate them on what we got to do next, and how do we move that fast? And I'm even learning from the financial institutions we're talking to about making that move too, right, about how the current regulatory environment and the current things that are going on, how it has shifted the way that they look at things compared to what we talked about 6-8 months ago.
Right.
And so that's been a huge shift, because before they said we would have never touched it, but we feel that the environment is moving towards a more favorable place for us. So we're willing to add a little bit extra risk, as we were talking about earlier.
So real quick, to add to that, two things come to mind as you were speaking. One was the cannabis industry. They had all this cash. The banks wouldn't accept it. They wouldn't take it. Right.
It's still happening,
and it's still it's still happening, right? So we've been trying to loosen that up for a long time. The second thing was cryptocurrency companies, right? They couldn't get bank accounts. I feel positive that change is on the horizon. With this new administration, just things that I know that Ben Horowitz is doing to help these things run smoother or happen much faster and much easier. So we have to keep on watching all those things.
When you're in a startup, you've got to think big.
Yeah.
And you mentioned also that in fintech, scale isn't about just the ambition to do it. It's not about being able to get that many customers, to get all that volume. It really has a lot to do with the infrastructure and the risk and the trust that you've been able to build with your partners in that journey. How should founders be thinking about long-term strategy in this space?
I go to the most simplest thing, think big, but start small. Keep executing one step at a time, and really, really build rich relationships. Because sometimes all it takes is a relationship to get something done that normally for the average individual that doesn't have that relationship, it won't happen. So, there's always, we're all humans, right? We're all humans. Everything is ran by humans. So it's like, somebody, they like you, you got the relationship, you can make it happen, right? And I think that going into fintech, it's really a space, like, again, highly regulated, really building those relationships that are necessary to get the yeses. And if you do get a no, you get a solution on how to go about it, perhaps, or how to circumvent it in a legal way, of course. So for me, it's always been relationships, man. My whole journey has been relationship based. And when I think about that, I think about how I was a people person in prison, and I connected with people easily. I just enhanced that my ability to do that. And that comes a lot from just my passion in who I am, and my persistence, my determination, my ambition, of course, and me being able to communicate and articulate myself in a way that people get it, right? All those things, all those soft skills, if you would, I think, can never be, shouldn't be underdeveloped.
We've mentioned the word risk so many times during this episode already, but it is part of the job. And some risks, man, they hit harder than others, and especially when they're overlooked early in the cycle. What kind of blind spots do you think most fintech startups are missing today, and how should they handle them before it's too late?
Underestimating the regulatory environment. Underestimating because again, you talk about how it moves at rapid rates. One thing that's good 1 month, next day you're out of business. You know what I'm saying? You're out of business the next day. So really, a lot of fintech founders overlook the depth of that regulatory environment, and really getting the right compliance people around them early on, right? Because it's great to have a grand vision, but if you're early on and you don't know how that really works, and you're still figuring things out, like you talked about earlier, just break things and move fast. You know what I'm saying? In fintech, you rather think about, okay, what can be broken, or you know what I mean, before you try to even break it, and why can it be broken? But that regulatory piece for me was always that thing that I always was like looking at and say, okay, well, what if this happens, what if that happens? How do we plan, and how do we, again, circumvent that in ways that work? But that contingency plan, because you can have a great grand vision of how you think it's going to work, and then the regulatory environment comes in and says, oh, nope, can't happen. Won't be done, can't be done.
Well, you're talking about fast changes, so I'm going to ask you to transport yourself 3-5 years into the future. And all you got to do is look into my little crystal ball here. Just look into it. Tell me, what is it you see changing in financial technology over the course of the next 3 to 5 years?
I think the regulatory environment is going to change again. I think it's going to change in a way that is more supportive of founders building great things. And I think that the access to individuals to break into tech, especially breaking into financial technology, is going to be so much easier. I have to mention AI. I have to mention AI. I have to mention AI. Like what AI is doing, and the way that it's moving so fast, and the way that it's empowering individuals, and really creating all these new economies, man. It's like almost overnight. It's wild, man, to see it in real time. Never thought I would live to see it. I'm glad I am alive to see it. And in the future, I just think everything's going to change, where people have more opportunity for access, especially those that are entrepreneurial, those that are visionaries, those that are creatives, those who really want to impact the world in a positive way. Because we've seen for so long these archaic systems work. Banking, right? We've seen how they worked against the people. They work for a cause, but for their own cause for the most part. But how do these industries open up to allow these visionaries to come in and change things? And I think that's what we're going to see, a lot of change in that way.
All right, my last question of the day. If you were to give a fintech founder, or a prospective fintech founder that's sitting across the table from you right now, today, and you could only give them one piece of advice, what would it be, and in one sentence?
I say have courage to achieve the impossible. Because a lot of times in fintech, you're facing things that are nearly impossible to change.
Dude, that is awesome. I freaking love it. Love it. Divine, thank you so much for sharing your real world experience, giving us a deeper look into how you have built and are building financial empowerment from the ground up. It's no small task. I've seen a number of people try and a handful of people succeed. So I'm super excited to see you doing that. One of the things that was really good about today is that you made sure to let us know that fintech isn't just about tech and it's not just about finance. It's about the trust. It's about the education. It's about the access. And even though there are regulatory hurdles, and they're real, believe me, they are real. And especially for underrepresented founders or those who have decided to change paths, as I like to say. And the other piece is that what I like about Notes is that creators deserve and musicians deserve to have tools that are built for them and not just something that's repackaged from the past that is good enough. I think that's a really big piece that I take away from this. And I really appreciate your time today.
Ted, it's been a pleasure and an honor, my brother, again. Thank you.
If this got your attention, great. There's way more where that came from. Go ahead, follow us over on YouTube, Spotify, or even Apple Podcasts. For deeper insights, go over to fintechconfidential.com and be sure to share this with someone who's serious about where fintech is going. And as always, keep moving forward. As we wrap up today's episode, I've got one last thing for you. If you're in the trenches fighting fraud and financial crime, you know it's a complex battlefield. That's where Hawk's AI tools for real-time payment screening, AML, transaction monitoring, and dynamic customer risk rating come into play. These aren't just buzzwords. They're game changers designed to make your compliance more effective and less of a headache. Imagine slashing through false positives with precision and giving your compliance strategy the edge it needs. Head on over to gethawkai.com to sign up for a demo and discover how their platform can revolutionize how you fight fraud and financial crime.
This has been a production of DD3 Media, with all rights reserved. This is provided for informational purposes only. It is not offered or intended to be used as legal, tax, investment, financial, or other advice. We strive to provide accurate and up-to-date information, but will not be responsible for any missing facts or inaccurate information. You comply and understand that you should use any of this information at your own risk. Cryptocurrencies are highly volatile financial assets, so research and make your own financial decisions.